Hey everybody, Trent Evans here, owner and senior tax accountant for self-employed tax experts, and I am here to walk you through the 2024 tax season tax packet for the 2023 tax year filing. So be able to utilize this, jump back and forth if you need any help on any of these sections. Um, More than happy to assist. This video will be your main source for identifying what you should be doing in these sections. However, our team is obviously there to help you as well. So you're going to receive this generic link. We are sending this out on Monday, January 8th. One key note, if you are a current bookkeeping client, then we will have something a little bit different for you this year to make it a little bit easier. So you will receive a customized link once your books are finalized by the bookkeeping team. So we'll keep an eye on that. As soon as they notify us, then we will send you a customized link with your P&L so you don't have to go through and attach all the information that we already have. All right. First question that's going to be on here is simply, is this for a business or personal return? Now, a couple things to remember. When we talk about a personal return, we're doing that for you with the business return. So in other words, if you don't have an S corp, if you don't have a C corp, if you're not in a partnership, then that is what this is referring to as a personal only tax return. So you can have a business as a sole proprietor, uh, where we're basically filing a Schedule C business return for you on your personal taxes. That's when you would select yes. Or if you're simply filing with W-2s, then you would select yes as well. And um, that'd be the only reason you would change the selection on this box. This link is going out to other individuals, not just our clients. So if you are not a current client of self-employed tax experts, just select no on there. When you do so, it'll bring up a link just says that we will review your packet. However, there may be some situations that may benefit you before we prepare your tax return. So we're happy to kind of take a look over this, give you a free assessment, kind of review if you may benefit from, if you're a 1099 contractor, you may benefit from looking at doing a backdated LLC and classifying as an S Corp for previous tax years. Of course, we're only going to do that if it saves you lots of money. So I'm not looking for just additional work for my team. As I tell all my clients, is if you're not saving money, then it doesn't help me. So I want to make sure we're getting you the best we can. All right. A lot of people took advantage of our fall tax planning sessions. With those sessions, remember that you are um, that is for tax prep, that is for planning, consulting. That is not your tax return. So I still need you to identify those strategies that we discussed that you would like implemented. That could be something as, hey, I want to add my spouse as a shareholder to the business. I bought a new vehicle. We talked about bonus depreciating that vehicle. Maybe it was something along the lines of looking to do cost seg on a rental property. Just any and all notes, the better. Okay. Also, if you are working with a lender, please, please, please identify that for us because we need to make sure that we're setting you up for the best success possible, which means that there's probably a specific AGI that your lender needs, and they don't want to see an amended return. They want to see that you've prepared the return correctly the first time. We don't want to file a return for you if your lender is waiting on it. We want their approval first. So if you're working with a lender to get a loan, make sure you select yes here. Anything specific, AGI, put their contact information, anything that will be beneficial, we want to know. Okay. I did skip one question. If you're in immediate need to get these returns done as quick as possible, understanding that we cannot e-file these until January 22nd, but if you need drafted copies for your lender and you want to be moved to the front of the list, just select yes, there is an additional fee for that. It's $100 per return. So if you have an S Corp and your personal return, that'd be a $200 charge. Okay, basic information here. Please put your full legal name, basically how it is on your social security card. That's the easiest way to make sure it verifies with the IRS. Date of birth. Going back to the name, if you're not sure exactly, maybe you've got multiple middle names or your last name is hyphenated. If you want to attach a picture of your social security card, this is a secure document. You're welcome to do that as well. Once we get further down with the attachments, and then we can do that. If for any reason your return is rejected because of a misspelling of your name, we will reach out to you for a copy of that social security card to verify that we have it completed correctly. Date of birth, phone number with area code, email. This is the email address that we're going to be sending the authorizations to. So whatever email address you monitor closest, this is the one that we're going to send your outcome to with your tax estimate. This is also the email we're going to send signing permissions to for your approval to file. So definitely put the email that is going to be the most accessible for you. Social security number, your current address. This can be your personal address. Even if this is different than your LLC address, this is the address that you want to list as your current residence. Okay. We do need copies of your driver's license. If you are in New York, we need copies of both the front and back. Just something to keep in mind. Other than that, all the other states were fine with just the front. Please make sure it's a current copy. If you don't have a current copy of your driver's license, we will be requesting that before we e-file. So just keep that in mind. You're going to select your marital status. Now, I get asked a lot, what if I'm head of household? Great question. Continue to select single. You're going to list the children or other dependents. We'll reach out to you to verify that you are in the correct position to file for that head of household status. Married, if you select married, it's going to ask for all your spouse's information as well. Take note here, we are going to assume that you are filing as married filing jointly unless you specifically specify to us otherwise. Okay. All right. Basically, we just need the same information from your spouse as we had for you. Now, do you have children or other dependents? Okay. If there's somebody that you're providing the financial care of more than 50% for, they're living in your home. This could be maybe an elderly parent. This could be maybe a fiance or somebody that's not working, and you're providing their spousal support. Then, or sorry, their financial support. Then yes, list them in here. Okay. As far as children, only list the children that you're going to be claiming as dependents for tax purposes. So if you've got a child that's maybe 18, 19, they're no longer living at home, they're on their own, they're not going to school, then you don't need to list them. We only need the dependents that you are listing for dependent purposes for your tax return. Basic information here: first, last, gender, social security number, date of birth. Okay. If we have this information from previous years, we can either send you a custom tax packet for that individual or for you for your tax filing, or you can just re-enter the information with that information for us again, whatever is easiest for you. If you would like a custom tax packet with your information already entered for previous years, happy to do so. Just email us taxes@se, like self-employed, taxexperts.com. You'll continue to go through to add all those dependents. And if there's any additional information we might need, you're welcome to add it there. If you have dependent care for that child, so in other words, if you pay for preschool, if you pay for daycare, if you have a at-home nanny, something like that, then yes, we need that information. If we list it for the dependent care credit, you will have to report that you are reporting this income to the IRS. So therefore, they will be getting a copy for that person to make sure they are claiming that income on their tax return. Just something to be aware of. You're going to identify how much you paid. This is for each child. Okay. Not total. So if you've got a situation where maybe the same school or daycare takes care of multiple children, just divide that cost between the number of children that you have at that facility. We need the name or entity that provides care. We need to know where that happens at. If this is your home address, then list your home address. We need that social security number, or if they are entity, then you will put the EIN for that person. Okay. And then same thing, you'll enter additional information if you had other, maybe you had multiple daycares throughout the year, multiple preschools, additional children you need to add that care for. Okay, employment. Now, this is where you're going to add basically the forms of income that you had from either W-2 or 1099 sources. If you do not receive a 1099, it is likely because you are set up as an S Corp and they are not required to issue that to you. However, please add your employer. So you could put in here ABC Solar or ABC Pest Control, whatever. Okay. For employment type, you'd select 1099. If you do not have a 1099 for that individual, simply write on a piece of paper what you're claiming for income from that enterprise, and you can upload it as a picture. Okay. Now, most entities will still issue you that 1099 simply to kind of, CYA with the IRS. However, if you don't get one, it'll be up to you to report the amount of money that you receive throughout the year for 1099 income. If it's a W-2, you'll just select W-2 here, and you'll do that for each person that you received income from. Okay. You will then upload all those images. Um, Please make sure that you are attaching those. It'll be much faster and a much smoother process if you attach everything correctly the first time instead of us having to reach back out to ask for additional information from you. All right, other sources of income that you may have received throughout the year. Did you or your spouse receive unemployment? This would be sent to you in the form of a 1099-G from the state. Okay. Remember, most of these forms are required to be due to you as of January 31st. So if you don't have them yet, don't worry too much about it. Just, you've got some time here, so don't feel stressed if you haven't received some of these forms yet. If you or your spouse have received Social Security benefits or maybe disability benefits, okay, you're going to attach your SSA 1099. This is basically where it's reporting how much of those benefits are, if you had any deductions withheld. Does not necessarily mean that it's going to be taxable, but give us the information so we can help determine that for you. Okay, this question is pretty important. Will your parents be claiming you as a dependent on their tax return? So let's discuss that for just a minute. What does that mean? So if your parents are providing more than 50% of your care, your cost of living, then they are entitled to claim you as a dependent. However, that is a decision between you and your parent to make together. So sometimes, handful a year, we have a couple returns that come back as rejected because that your social has already been claimed as on somebody else's tax return. It just, then we just have to redo your tax return. It just costs you more money. So please have that conversation. Uh, Most time, if you have an S corp, you're providing your own care at that point. So it's extremely rare. However, if you're still living at home, your parents may be under the assumption that they're still going to claim you, especially if you're going to college, because then the education credit would go to your parents instead of you. So have that conversation. Reach out if you have any questions. Also happy to kind of review both situations to identify what would be best, maybe for you or your parents on who claims that credit. So if you are being claimed by them, just select yes so we know, and we'll identify that correctly on your personal tax return. Even if you're being claimed as a dependent on your parents' return and you have an S corp for your 1099 income, you still have to file that business return as well. So don't get that confused. All right. Same question for your spouse. Basic question here. Were you living outside the US for more than 6 months? Most likely that's going to be no. Okay. If you were to do a refund, would you like to receive it via direct deposit? If so, you'll just put in your banking information for us. Keep in mind, this is a secure form, and this is only if you were due a refund. Putting your information in here does not mean that your taxes will come out automatically for any tax payments you owe. We'll discuss that later. Insurance information. Here you're going to simply list if you had health coverage. This is health insurance that you would have paid premiums for. Yes or no. Um, Most likely yes. If you were covered through your parents' plan, you can simply put that in additional comments, right? So yes, I had health coverage. I was covered under my parents' plan. Okay. If you were covered through the marketplace, you will receive a document called a 1095-A. You can get this through healthcare.gov if you have not received yours as of January 31st. This is a required form to be attached to your tax return when we e-file. Multiple chances are that we will have to reach out to you and request this document if you did not provide it to us, because the IRS will not even allow us to submit your return if you have record of receiving or having health coverage through the marketplace during the tax year. Excuse me. Okay. Now, there is a chance that if you had any out-of-pocket copay or medical expenses, those may be deductible. There's a good chance that they won't be. But like I said, the more information, the better. So make sure you list those for us. This could be prescriptions. This could be copay visits, right, when you go to the doctor. So any of those type expenses. If you have health insurance that was not provided through the marketplace or through an employer, in other words, you went out and got your own coverage through um, United Healthcare, Blue Cross Blue Shield, we need to know the annual amount of those premiums. Okay, that could be a self-employed tax deduction for your business. So the annual amount, not the monthly. And also, unfortunately, like Christian Health Share is not an actual health insurance company, so those are not health insurance premiums. Those do not qualify. You can research that on Google if you have any questions as to why that is the case. Okay, post-secondary schooling, college education, very likely. So if you were, simply yes, we will need the 1098T, 1098 tuition statement from your university. This will identify the amount of tuition and expenses that were paid to the school on your behalf. Even if you had a scholarship or grant, that will be listed on that return as well. There's still a chance that we will be able to get a credit for you, even if your scholarship was more than the actual tuition paid. So make sure you get that document for us. We will maximize that to the best of our ability for you. Same question for your spouse. And if you had any dependents, such as if you had a child that was attending school that you're claiming as on your tax return, then you would be the one to claim the education credit for them. And so we would need that information for them as well. Student loan payments got reactivated late in the year. You should get a 1098E if you made any of those payments. Remember, the interest portion is what is deductible as far as an adjustment to your income. So we will need that packet, or I'm sorry, that document to potentially adjust your income for that amount. Okay, a couple basic questions for the education information. Were you at least a half-time student? That'll be identified on your 1098T. Make it really simple. Did you have a scholarship? Once again, that'll also be identified on the 1098T, but please point it out just in case. And if so, how much was that scholarship? We will need to know that. Now, this next question is kind of what were your out-of-pocket expenses in addition? Now, room and board is not an additional expense. Okay, what we're looking at here is if you were required to buy books, equipment, maybe you had to buy a specific calculator, different supplies, if you had to pay any lab fees. Those type of expenses are what we're looking for here. Okay. Now, this next question is pretty important. Okay. How many years have you been attending uh, post-secondary schooling? So, in other words, not what year of school are you? So, not if you're a freshman, sophomore, junior. That we're not worried about. What we're worried about is this the third year that you'd be claiming education tax credit, fourth year, etc. Because one of the education credits, the AOC, is only available for 4 years. And we don't want to claim that credit if you've already received it more than 4 times. So please just verify for us how many years you have been in post-secondary schooling, and that will help us identify that credit. You'll have the same questions here for the if it was a dependent. That's why that section popped up, because if you remember, we had it for our spouse here. So that's why that popped up twice. If I select that as no, then that goes away. Okay. If you have any questions on um, if you've already claimed this 4 years or more, you can simply go back and look at your previous year's tax returns. Look for the tax form 8863, and that will identify if you've already claimed that AOC education credit. So, once again, welcome to put any additional comments here as well. Okay. Finance, so stock trading, crypto, anything with brokerages, that's what we're looking for here. So any stock trading outside of an IRA. So, and same thing, like I get asked a lot about like whole life insurance policies, or that are tied to investment. Same thing. It's like we're not worried about that right here. What we're worried about is any taxable transactions. So if so, you would get a 1099B. Okay. This would be for brokerage. So you would have Robinhood, Acorns, TD Ameritrade, Fidelity, Bitcoin, Coinbase, those type. Okay. The next question leading into that, did you purchase or trade in virtual currency? There's a chance that maybe you did that did not result in a 1099B, but according to the IRS, you are still required to report that income. Now, there are lots of services out there that will help you if you are in the process of mining Bitcoin and you have other costs associated. Then there are other services out there that will help you kind of simplify, simplify is not a word, simplify the process of calculating all those transactions. That is an additional fee. We do not do that, but that will save you so much money to make sure that that is being reported correctly to the IRS. if you need some help with some of those services, please reach out to us. We're happy to refer them over. You basically pay them, they import your information, and they create the 89499 for us to attach to your tax return, showing those taxable transactions. So you'll attach those 1099-Bs here. Keep in mind that that can also report some things such as dividends, interest that are reportable as well. Now, you'll see, sorry, my nose is itching. You will see in our pricing later on up to a $75 charge for each of those forms. I'm not trying to nickel and dime my clients, okay? If I have to take extra time to attach these additional forms that we do get charged for, on our software, that some of these forms do cost us extra, and we have associated fees for that, then I have to pass that through to our clients that need those services. So if that is the case, then I will assess an additional charge for that extra time and those extra charges that we incur. However, I'm going to be as fair as possible. So if you have 5 different agencies, that doesn't mean I'm going to charge you an extra $350 or $375. It's like I will make my best assessment based on how much time and cost I actually incurred for that. Okay. Interest income. If you maybe have a savings account at your bank, you get a 1099 interest statement for anything over $10 at the end of the year. Just attach that for us. That is reported to the IRS, so you do want to make sure that you include it on your tax return so they don't send you an adjusted balance due after you've already submit your tax return. Will you or your spouse contribute to an HSA? HSAs are great if you have the qualified expenses to make it worth it. So if you are contributing to an HSA, that might even be through your W-2 with an employer. We need to know what that amount is that you contributed because that is an adjustment to your income. Nice thing about HSA is when you take that money out for qualified medical expenses, not taxable. So that's how you get the benefit of that health savings account. If you're contributing to a retirement account, keep in mind, Roth IRA contributions are not tax deductible. In other words, you're paying the tax now to allow that money to grow tax free. So we don't even need to know that information. Okay. But if you contributed to a traditional IRA or a solo 401k or a SEP IRA, we do need to know that information. Okay. If you're not sure what your account is, check with your financial advisor, or if you have statements you want to send to us, we can help with that as well. We are not financial advisors. I cannot advise on that. I can simply kind of give you the tax implications of how that works, but happy to help assist to get that answer for you. So you're going to identify who it was for, whether yourself or your spouse, if it was a traditional IRA, solo 401k, SEP IRA, and how much you contributed. Keeping in mind that you can contribute all the way up till tax day for the previous year. So you have until April 15th of 2024 to make any contributions to those accounts for 2023. Of course, there may be some limitations with that. So please, once again, check with your financial advisor to verify that you can make that contribution. Okay. If you took a distribution out of a retirement account, you may be subject to a penalty. Okay. You would receive a 1099-R for any of those. Now, there are times when you can take a distribution and not have a penalty. And there are also times where maybe you're rolling over those funds to a new account and you still receive a 1099-R. That does not necessarily mean that it's taxable. So, excuse me, you will simply have to attach that document. We'll review it, make sure that if it is or isn't taxable for you, and get that recorded appropriately. Okay. Charitable contributions. Okay. GoFundMe, not necessarily a contribution. Okay. Charitable contributions to the IRS are to qualified organizations that have been registered with the IRS. So you should receive a contribution statement at the end of the year. Those are the donations that we're looking for. Things that are common would be churches or nonprofits. You list the name, how much was the donation. It doesn't necessarily have to be cash. It could be stocks. It could be property. Maybe you gifted land. Obviously, you should receive some sort of receipt, documentation for that. Once again, I would much rather have more information than less, so send over as much as you can, and we will get that reviewed for you. If you donated goods, this could be Goodwill, Salvation Army, Deseret Industries. Keeping in mind, anything over $500 in value will require a breakdown of what was contributed and the fair market value. So if you're going to claim more than $500 donation to those individuals, uh, then we do need a breakdown of what was contributed and the assessed fair market value and the dates, etc. So that's anything over $500. Okay, you have multiple options here. You can, if you donated multiple charities, so you'll see that you'll have plenty of options there to make those selections. Okay, now, did you pay any state income tax last year? If we filed your tax return, I already have that information. You don't need to go back and look. If you're a new client this year, the reason that we may need that is if we schedule your itemized deductions, then that may benefit you in increasing that amount. So that's why we may need that information. But as I said, if you're a client of ours and we did your return last year, we already have it. No need for you to go digging it up. You're certainly welcome to put yes or leave it as no, and you can just write in the comments, returning client. I already have that information. If you own a home or maybe you purchased a home at any point during 2023, this is personal residence. We are not looking for rentals at this point, okay? If you did, you're going to get a 1098 statement. This is for your mortgage. This is going to report to us how much you may be paid in property tax or mortgage interest for sure, mortgage insurance premiums. If you sold a home, we need that information as well to determine if you're eligible for the home sale exclusion, such as when did you buy the home, how much did it cost, when did you move out. I would like a copy of those closing documents, especially the settlement statement, just so we can help verify exactly what the taxable amount would be to minimize that as much as possible if you do not qualify for the home sale exclusion. If you have questions on that, please reach out to us via email, taxes@setaxexperts.com. We can kind of help advise as to what may or may not be taxable in that situation. Okay, here's a good one. If you added solar panels, you get a 30% federal credit now. So, of the cost of that return, the cost of that system. If you added additional batteries or panels to your already installed system, that is deductible as well. It does not have to be an entirely new system. So, one thing I would say is don't just round the total. If you've got an exact total, that's what we want. If you also have some sort of invoice or total for that you have purchased, it does have to be in use as of December 31st, 2023. So one thing to keep in mind. All right, lastly on that is, once again, if you have any credits that are being carried over from the previous year, I only need this information if you're a new client. If we prepared your return, I have that information already. All right, now we are getting to the rental or owner-occupied investments. On this is where Airbnbs, traditional rentals. If you have multiple rentals and you don't want to fill this out for me for each rental, you would rather attach a spreadsheet, let us know. I can send you a pre-made spreadsheet that has the information that we need already listed, and you can just fill that out and attach it instead of having to go through and break this down for every single property. Things that we need to know is obviously the address. What type of rental is it? Is it a single family, multifamily? In other words, a duplex, quadplex? Short-term Airbnbs are taxed differently than your traditional rentals. So, and lastly, if it's a commercial, if you have maybe an office warehouse or something like that. Okay. If it was owner occupied, now this can get a little confusing. So if maybe you share the property, you rent out maybe a basement or a mother-in-law suite, whatever, okay? Then yes, you are going to mark yes on this portion of the packet, okay? If it's one that's co-occupied, what percent are you renting versus how much are you staying in? So if it's 50-50, that's pretty simple. You're going to put 50% here. How many days was it rented out? If it was rented out the full year, 365. If it was how many days did you use it? 365, okay? Other situations, maybe you live in it half the year and you rent it out half the year because you go live somewhere else during the winter or whatnot. So if that's the case, then you're going to put 100%. I'm sorry, let me rephrase that. If that's the case, you're going to put 0% as owner occupied for the times that you were not living in the home. And then you would list out the number of days that it was rented out while you were not there, and then the number of days that you've used it. So maybe you were there for 270 days and you rented out for 75 days. That's where you would list that information. Excuse me. We do need to know the purchase date of that rental property. That does not necessarily mean the day that you started it as a rental. Maybe you had a home that you converted to a rental when you moved to a new property, but I still need the purchase date of that rental property. Okay. What was the price of that property? The reason we're asking for this is to look and see if depreciation is going to be a benefit for you or not at that time. And yes, you may get some deductions if we take depreciation. However, that would also mean that you would lower your basis when you sell that property, which would lead to potentially larger capital gains. So we're only going to do that if it makes sense for you. If you sold the property, obviously we need to know that as well. And then you're basically getting into your expenses. So we need the 1098 for the mortgage. We need to know your rental income. This is the amount you receive, not the net amount of your income less your expenses. So if you're charging $1,000 a month for rent, then this would be $12,000. Did you receive any 1099s? If you have a property manager or somebody that maybe uh, managing the property for you, they may issue you a 1099. If so, we need that document. Significant remodel. This would include any structural improvements. Okay. In other words, if you sold the property, you would not take this with you. So add-ons, additions, if you had to, maybe you had a plumbing leak and you had to tear up the floor, if you had a roof leak and you had to fix the roof, those are the type of things that we're looking for. Infrastructure. Okay. Rental furnishings would be things that you bought to, obviously furniture, TVs, couches, exterior. Maybe if there's a pool, you bought pool toys. All those type of furnishing, exterior lounges, etc. We do need to know the cost of that so we can depreciate that as well for you. Now, when we get to the expenses, these are your annual expenses. So, did you pay to advertise the property? How much did you personally have to pay for cleaning and maintenance? Okay. Real estate commissions, the lawyers that we would need that is if you bought the property in the year and you had to pay a real estate commission as a buyer, which isn't likely. But sometimes it does happen. So that would only be incurred in the year you either bought or sold the property. Insurance expenses, that would be your hazard insurance, management fees. Once again, if you pay a management company to do that for you. Supplies. If this is an Airbnb, this could be pretty hefty. This could be all the dishes and toilet paper and paper goods that you leave in the home since you're providing hotel-like services. Um, Property taxes should be listed on the 1098 for us, but go ahead and put it there in case. If you're paying the utilities, even if they're even if the client is paying for those in their rent, if the bill is coming to you and you're making that expense, then we need to be identifying that expense for you on the return since you're claiming the income to cover that. HOA, any repairs. So this would not be major remodels. This would just be your basic repairs. Maybe you had a sprinkler system that had to be repaired or an appliance repair. Those are the type of repairs we're looking for. Pest control. If you have any other expenses that aren't on this list, just add them in the additional comments. We want to make sure we're maximizing all your expenses for you. All right, now we get to the meat of the return. So everything above was basically for personal only. Now we're to the business section. So you're simply going to identify what type of business you have, door to door, or your general business, or if you didn't have a business and you're simply doing a personal only return, that's all you have to select. Okay. General business has a couple different questions. We'll kind of get to those. So let's go through general business first. Okay. If you're keeping your LLC open and running, that's the default response. If you're shutting down your business and this is going to be a final return, we do need to know that. Okay. If you have multiple businesses, I don't need a separate tax packet for every single business. Okay. Um, The easiest thing would be fill out the packet once, include this packet for one business, and then just simply attach a profit and loss report for me, um, a PDF, Excel, whatever you want to do, in the other documents below, and that way you don't have to fill out a second packet. And if you select yes here, it will simply ask what packet are you filling this out for, and then as I just said, for your other businesses, attach a revenue and expense form. If you'd like, we're happy to email one to you to make it super simple. Okay, and you can attach it here. All right, if you had an address change, even if we've already done that address change for you internally with your state, uh, still select yes. That will just be a good reminder. Make sure the tax team is reviewing that on our end as well to make sure that your tax return address is updated as well. As I mentioned before, if you're a bookkeeping client with self-employed tax experts, in other words, you're paying us each month to go in and reconcile your credit card accounts and your bank account, then select yes. I don't need this information. If that's the case, all I need to know is some of those things that wouldn't show up in those accounts, such as home office, additional meal expenses, and your vehicle. Everyone else, since we're not doing your bookkeeping, I do need that information. So, things that we're looking at here. What is your gross revenue? Okay. This could certainly be higher than what a 1099 reports. Maybe you have an online services store, you get a 1099K. That does not necessarily mean that's all your revenue. So I do need to know the exact total for that. If you carry inventory, and once again, if maybe this is an online store, if you have inventory, I need to know those beginning and ending values. If it was a return we prepared last year, I already have the beginning value. So you're welcome to provide an estimate there, or just leave me a note at the bottom reminding me that I should already have that. Home office deduction. Okay. We're going to look at two options here. We're going to either have our simplified or we're going to have our indirect method. Simplified is really simple. It's basically $5 a square foot for a maximum $1,500 deduction, or in other words, 300 square feet. What is considered a business office? Okay. Must be a room that is used exclusively for business. Okay. So it cannot be a room that you do other personal activities in. So you can't claim a kitchen as a home office deduction. You're not going to claim a bathroom as a home office deduction. Okay. If you uh, have the argument that you're renting this out for business, well, then that would be a rental property that should have been identified above. Okay. So for this situation, we're looking at like a dedicated office space. And like I'm in right now, I'm in my dedicated home office. And this room is, well, let's call it probably 10 by 10. So I'd have 100 square feet, which means if I took my minimum, if I took the simplified method, I would simply be looking at a $500 tax deduction expense for my home office. Now, if I want to look at my indirect method, I would take my 100 square feet and I don't even know, let's say this home is 2,000 square feet. Okay. So now I'm basically saying that I have a, what, 5% of my home is being used for home office. So then I would take my indirect expenses. If I'm paying rent, if I am, my utilities that I pay, my renter's insurance. Okay. If I own the home, then I'm not going to include rent. I'm going to include the amount of mortgage that the interest portion of my mortgage. Okay, and it breaks it down here under regular method. So I'm simply go ahead and fill out both. We're going to take the best of those for you. One thing to identify is that that room can qualify. You have to use it at least 15 days. Um, a month in order to qualify for that expense. So as long as you're entering this room and utilizing it for some sort of business expense for 15 days, that is one of the qualifying rules, and you get a credit for each month of the year that you're doing that in. Okay, your expenses for the business. There's good descriptions on the side here. If you did a tax planning call with us, those were just estimates, okay? Those are not actual expenses. The reason is I have to have an authorized tax packet from you with those totals for the year. You're certainly welcome to utilize that as a guide. However, I need you to identify for me what those actual expenses were. Couple good rules of thumb. Um, if you're going to estimate, and when I say estimate, don't round. Okay, so if your cell phone bill is typically about $50 a month, okay, well, actually look at one. If it's $49, then you're going to report $49 for the number of months that you were in business. So, for 12 months a year, you wouldn't just put $600, $50 a month for 12 months. Okay, you would put $588, $49 a month, 12 months a year. So it is not better to simply round. We want actual expenses. Okay. Advertising, don't forget that this could also be like if you're paying for referral or lead services, okay? Marketing your business. Accounting fees, this would be anything you pay other than to our firm. So if you're paying for a QuickBooks subscription to help you track your expenses, maybe you pay for a QuickBooks app, something like that, those would be accounting fees that you're paying for. Rent. This is not your own home personal office. This is if you have a space that you pay for rent when you're out of state doing work, or if you rent an additional office space, either warehouse or office for your business. This is not your home office or your home personal residence. Same thing with utilities. Okay. Now you may be paying for internet for your business, um, and that would be different, right? You could certainly include your internet expense as a utility um, that you're paying for just simply because of work. So utilize all these descriptions. Once again, this is not an all-inclusive list. If you have additional expenses, please list them for us in the additional comments. We want to make sure we're maximizing those expenses for you, right? One thing I'd point out is we have all of our travel expenses kind of lumped together here: hotel, business, rental car, rideshare. We do that to make it simpler for you. If you have a total of your total business travel expenses, you may list that all in one category. So instead of breaking it down, don't feel the need to do that. Let's say you spent $4,995 between flights, hotel, travel, and rental car. Just do that and leave the other three zero. Okay. I kind of identified that in the notes here. You're welcome to list all business travel expenses in one category. We simply provide these categories to make it simpler for you if you don't already have it totaled up. So, a couple of these categories do go away if you select door to door, simply because they don't apply to door to door. So let me go back and change that. Okay. So you'll see most of them, but then you also have like a discount fee. Discount would be if you're paying anything out of pocket for the client to get the deal done. So if you're, hey, I'm going to cut that tree down, I'm going to make it easier to get those solar panels up, or I'm going to give you $500 out of my own pocket if you sign the deal. Those are the type of discounts we're looking at. Okay. Uniforms, that's a common one. Just remember, uniforms are something you would not normally wear outside of business. So, a good rule of thumb is if you've got a kind of a screen printer, someone in the area, all you have to do is go and get maybe the sleeve of your shirt, right? Just have it embroidered with your business name. You can pretty much find some seamstresses to do that for about $5 a shirt, if that. So that's one way to make it an easy business deduction for uniform expenses. Don't forget about replacing your walking shoes when you're a door-to-door salesman as well. All right, let's see here. Continuing education, just remember that is not tuition. These are things like conventions, seminars, books that are helping you become better at sales or leadership, professionalism, those type. Okay. If you had 1099s, so if you paid money to somebody else to assist, or that you had to split the commission with, but you got paid the full amount, you are required to issue them a 1099 if, let's just change this to, okay. So as you see, once I get to 600 here, a new question pops up. Okay. Anybody that you paid more than $600 to, you're required to issue that person a 1099. So if you paid one person 500 and another person 100, then you would not be required because you did not pay one individual 600. But anybody you pay $600 or more, um, you are required to report that 1099 to them. Now, not to them, but also to the IRS. So we can help you with that if you need that. Simply reach out. It would be our bookkeeping. So any of this information, you can reach out to our general email. info@setaxexperts.com. You are required to issue those as of January 31st. So um, please make sure that you're being diligent with your business and reporting it appropriately to us. So we simply ask, were you required to issue any 1099s? Yes or no? Did you? We have to report that on your tax return, so please let us know, yes or no, so that we can report that appropriately for you. If you worked out of state, it's going to bring up some options here as far as what state. Choose the local, choose the nearest city. So, in other words, if I'm in Alabama and let's say I was in Hoover, okay? Hoover is a suburb of Birmingham. So I'm going to select Birmingham as that option, okay? So choose the nearest city to where you were for this meal per diem. The way meal per diem works is you're simply reimbursing yourself as the employee of the business for the inconvenience of having to travel out of state for work. And so the business is able to take a 50% meal deduction for the standard per diem rate. So we need to know the number of days you were in that city. And also, let us know how much you did spend while you were there. Now, this is for restaurants and fast food. You know, if you're paying for DoorDash, whatever, that's fine. That's just a delivery vessel to get the food to you. Okay. But basically, what you're paying for is meals that were prepared for your immediate consumption. And so we want to know if you spent, like, hey, while I was there, I probably spent $1,500. Let us know that because that may be better than what the per diem rate is. So we want to look at both options to make sure we are giving you the maximum amount. Now, let's say that you were gone a total of 7 months throughout the year. Okay, so maybe you were in Birmingham for 90 days and then you got transferred to California. And let's say you were in the Los Angeles area and you were there for 120 days. Okay, well, as you can tell, that's now 210 days you were out of the state. So, one thing keep in mind is that as long as those are between different states, not a problem. If you ended up staying in one state for more than 180 days, then we are likely going to have to look at filing a part year resident return for you at that point. So, we're probably going to cap this at 180 days just so that you don't have to file a part year resident return and we can just continue to file all of your income through the LLC in which your state is organized. But fill out all the information, we'll take care of it on our end. Now, other meals that when you weren't out of state, okay, that could be meals that when you're in state, you're still working, maybe not on a day-to-day basis, but maybe you have meetings, you're still recruiting, getting things done at the end of the year. We still need to know that amount of business meals as well. Also on how much you spend on recruiting meals. So if you're paying for team dinners or you're having meals brought in for the team, and you're paying for those, we need to know that amount of meals because those are additional in meals that you spent in addition to your personal per diem meals. Business vehicles. Okay, remember, it's your personal vehicle that you're utilizing for business purposes. So what we're looking at here is, did you own a vehicle that you use for business? Yeah, okay. If you sold that vehicle, I know it says if it was previously depreciated. If you sold the vehicle, just put yes. Give me the information. If it wasn't depreciated, we have nothing to worry about. But that way, we can make sure that we're accounting for all of your vehicle information from a tax perspective. We need to know if that was mainly if it was done through loan or lease, simply because there are different taxable options when a vehicle is loaned or lease. Yes, this is very likely that we have some of this from the year before. However, we don't know if you are still utilizing that same vehicle or maybe sold it. So I do need that information provided again. So purchase date, when you began to use the vehicle for work. Um, and let's see here. Let's say it was a loan. Okay. It's going to ask you for the year, make, and model. If it's over 6,000 gross pounds, okay. The reason we ask this is because there are some ways that we can potentially bonus depreciate this. And so it doesn't mean we're going to. We're just going to look at what your best options are. If you're unsure on this, then please put that in the notes at the bottom. Like you can put not sure if over 6,000 pounds or not. I can look it up as long as you've provided me the year, make, and model. What we're looking for is a gross vehicle weight. So, how much did the vehicle cost? If you'd rather, just put a copy of the sales contract in here for me. Don't get caught up on what your trade-in was and how much you put as a down payment or what the finance value was. We're looking at the vehicle cost. So just attach a copy of the sales contract and I can help figure that out for you. We're going to look at both options of either actual expenses or mileage. So I do need the cost of what you're paying for gas repairs and maintenance. I also need the cost of insurance. Okay. Simply because if we decide to do the actual method with depreciation, we can still take those expenses for you in lieu of the miles driven. So asking for all the information allows me the best percent chance of giving you the best tax deduction, not just for the current year. Okay, when I look at the tax deduction, I'm not looking at just what's best for you now. I'm looking what's best for you over the life of that vehicle and making sure that we're maximizing that potential for you. So, total miles driven for business. Okay. Now, if you're driving to another state, maybe you live in Utah, but you're going to work in Texas, all those miles driven to get to Texas are business miles. Okay. So we want to know the total number of miles. Once again, don't just guess here. Okay. Look at odometer statements, oil changes, look at some things. But what we're looking for is the number of miles driven for business in 2023. If you have that vehicle on a loan, the interest portion of that loan is also tax deductible based on the business use percent. So you can look at your statement each month and see how much of that vehicle payment is being applied to interest and input that number here for us. And that'll be an additional tax deduction for you. It will allow you to add, I believe, up to 3 or 4 vehicles. If you have more than that, just attach a spreadsheet with the same information for us. That way. Or if you don't want to do any of these on this, just attach a spreadsheet for all of them. That's fine too. Okay. Couple less common tax items to finish this up. Did you purchase an electric vehicle? Now, the tax laws did change this year for electric vehicles. So here's a good website. I put the link in right here. You can identify if it was a new vehicle, if it was pre-used, what those differences are to help determine. Okay. But if you did, I need to know the year, make, model, and I need the VIN number. Okay. If it's a specific model, long range, short range, please put all that for me. The more information, the better. Okay. All right. Back in 2008, one of the things the IRS did, I'm sorry, the government did was they instituted this first time homebuyer credit. Typically, that was a $500 payment over 15 years. So that is coming to an end. But if you took advantage of that at the time, just let us know because that will mean that you will have probably likely a $500 payment that will go against your taxes this year. So if you've ever been divorced, we do need that information. Once alimony is not necessarily tax deductible after 2018, but if your divorce was finalized before 2018, then those rules apply for you. Then we need to know that information. So if you have another business that supplies you with a K1, so partnerships, maybe you invest in minerals or oil wells or other real estate activities. This is where you'll attach those K1s. It's a very good chance that you may not even get these till June or July. Don't be concerned. If we don't have your tax packet to us by February 28th, I'm filing a business extension for you. Now, if you're all caught up on your invoicing with us and you don't know anything, I'm doing that for free. Okay. So you don't get a non-filing penalty or late filing penalty. If you have a current balance with us as of February 28th, please get that resolved so that you don't have to, so I don't have to invoice you as well for preparing an extension. Okay. So it's okay if you haven't received those documents yet. We'll file an extension for you. You can just fill this out and prepare it to us once that's ready. So, estimated tax payments. If you are making personal tax estimates towards your federal or state income tax liability, okay, that's what we're talking about here. We are not talking about your quarterly payroll taxes that we file for you on your 941s. This would be through what's called a 1040 ES or estimated voucher that you'd either be doing through EFTPS or mailing those in directly. If that is the case, I do need to know that information, when you paid them, how much, and if possible, you can even include an attachment that shows those payments cleared your account. Excuse me. And that'll make it even better to make sure that the IRS has record of it. Excuse me again. Lastly, if you had any other tax documents that didn't seem relevant anywhere else, go ahead and attach them. If you have any spreadsheets, maybe you run an Amazon store, and you need to help determining some of those expenses. Attach anything and everything you want. If you're a new client, I need your previous year's tax returns, okay? Then you can attach copies of them here as well, just to make sure if anything's carrying over that we're taking advantage of that. So um, try to make this as easy as possible for you to make sure that we're maximizing your tax deductions and benefits. So any comments? Okay, please let us know. I'm always looking to improve. I'm not perfect. My team's not perfect. We know that there's things that we're trying to improve for our clients to make this process easier in the future. So please continue to leave some feedback for us. We love it. I try to be as transparent as possible. So here's my pricing. There's no increase from last year. Okay. So it's the same business and personal. You're basically looking at 575. Okay. That's 450 for the 1120S S Corp return, and then I give you a $50 discount for doing your personal. So that's how you get to the 575. If I'm doing a partnership return for you, it says 800. There's a good chance it's going to be less than that. Okay, that's for if it's two partners. If it's four partners, it'd be 1,000. I'm probably going to do it for less than that. It really depends on the information you're providing me and how long it takes me. So, but partnerships do take a little bit longer to prepare. One thing to remember, if I'm preparing a partnership return for you, I'm going to send that to the managing member, which is our client. That individual is then responsible for issuing those K1s to each of those other members in that LLC. Not our responsibility. You will be responsible for issuing those LLCs. I'm sorry, those K1s to the other members of the LLC. If you do not have an S Corp and you're still filing just as a Schedule C business return, okay? In other words, you're a sole proprietor, it says 500. Once again, chances are, if it's super simple, I'm going to be less than that, okay? Other forms that may acquire different additional charges. First one here, okay, rental properties. Yes, I do have to charge for each rental property. It's a lot of work that goes into preparing those returns. Getting that information for those additional K1s. If you did cost segregation, there are very specific rules that have to be followed with cost segregation. We're essentially changing the accounting method for that property. So yes, it's in a very expensive and intensive process. Yes, you're saving thousands of dollars with it. So I do 500 for the first property. If you had additional properties as well, then obviously I'm giving a discount. Okay. But that is quite an intensive process. I do have to charge extra for that. If you did a home sale exclusion, that's an additional form that I get charged on, so I do have to include that. This is the one that's most common, the 1099Bs, like I said, up to. I'm not going to charge you $75 for every single one. If it's a simple transaction where it's like, hey, there's only one or two trades, I'm not going to charge you the $75. I might charge you 25 for the additional form, the 8949 that I have to attach to the return. Okay. If you have more than three states, yes, I do get charged on each additional state I add to a return. So I'm covering the first two. If you have a third state, I'm going to have to include that. Solar credits, electric vehicle credits, and any excess W-2s, 1099s. If you have 20 of them, it just takes extra time. So I do have to charge for the extra time for that. That's all. But once again, it's not my intention to nickel and dime. I try to be as thorough as possible. I want to keep my prices competitive for all clients, and at the same time, make sure that we're staying competitive within the landscape of our business. So you see all the pricing before you submit the return. We will never file your return without your authorization. Your signature here simply is authorizing us to prepare your return, that you agree to the charges that we're going to assess for the time to prepare your return. You are not paying us to file your return, you're paying us to prepare your return. So if I'm taking the time to have my team prepare off a submitted packet that puts it in order of somebody else, then yes, I am going to invoice you for that charge. So this is your authorization here. You will draw your name. Once again, please tell us about your experience. We know that this could be better. We're continually trying to make it simpler. The last thing I would point out is there's a save button in the bottom corner. If you cannot fill out this packet all at once, please utilize that save button. We've tried different things in the past, different pages and whatnot. The problem is when we do that, um, it wouldn't let you advance without attaching the necessary documents. So we didn't like the page aspect as much as just doing it in one long form. So if you're going to leave, walk away from your computer, just get used to hitting that save button. Okay. That way you don't lose your progress and you don't have to start all over. But share any feedback. It will verify that you've attached everything as necessary, and then you can hit submit. Once we receive it, we'll verify that we have all the necessary documents. Once again, don't attach it or don't even submit if it's not ready. It's not going to speed up the process. If anything, it's going to slow it down because now you get moved into a new queue of missing docs. And honestly, I just have my team check that once a week because we don't have time to go in and verify that every day. So please be diligent. More information, the better. Reach out with any questions. We really appreciate you as clients. Want to do the best job we can for you. Once you submit it, my turnaround time, especially the beginning of tax season, really quick. You're looking 2 to 3 days. Once we get into middle of February and kind of peak deadline of the first 2 weeks of March, now we're getting to the point where it's going to take me a couple weeks. Okay, but I want to do the best job possible. So the more information, the better. Once we are done, we will send you an email to the email address you list in this packet that will have your outcome. Okay, it will tell you what you owe for if the business owes any tax. Some states require an S corp tax. It will tell you if you owe any federal or state income tax and how much to those states. It will tell you any relevant notes that we had with the tax return. We will also email you the authorizations to sign to allow us to file this return for you if you're ready to accept. So watch your email. That's how we're going to communicate back to you. We like to have everything documented. We don't do anything based off verbal authorization. And once we have a record that you've paid your invoice to us and signed the permissions, then we'll have that e-filed for you. Do we pay for your taxes? We do not. We do that so that you can pay your tax balance on your schedule. Okay, so you can make the payment electronically through the state website or the federal website. You can mail them a check if you'd rather, if you need to sign up a payment plan. That way it's on your schedule for what you want to do. Of course, in our outcome email, it has instructions on how to assist you with any of that. Plus, my team is available to help walk you through that if need be as well. But the reason we do that is so that you don't have a tax amount come out of your account without you expecting it because we submitted your tax return. So with that, I'm excited. I'm looking forward to it. It's going to be a great year. I really appreciate you as clients and the team that we're working together. And good luck. And thank you so much.